What's going on, everybody? It's your boy C-Zar, and in this video I would like to build out a proper case for why I believe the crypto bull market is still alive and intact, and why we should expect nothing less than a fantastic end of cycle finale to come our way any day now, any week now, going into the rest of this year and even to start off the new year of 2026. Right now, things don't make sense. We don't know left from right, up or down. Everything's wrong, right? October was a scam. Bloodbath September was also a scam. We actually moved up in there. To be completely fair, we did see new all-time highs in October. October 6th was our, and currently is our all-time high point for Bitcoin as far as like historical highs go. But James Wynn is right? James Wynn was calling for a dump, and he was right. Things don't make sense. We're in an alternate universe right now, you guys, and I want to get us back to reality, because moments like this, again, they can be depressing, they can be unsettling, just trying of your patience and your faith in the markets. And really, I mean, we look at the charts, not this chart, we'll get into this chart in a second, but really we have higher lows. It's kind of interesting how we can have such high levels of fear and yet we're getting higher lows, right? Bears are super loud right here. They're just as loud here as they were here, on every single higher low that we've had. But we're going to get into that in a second, okay? The first thing that I'd like to talk about, that very much, in my opinion, as a seasoned crypto investor, the first thing I'd like to talk about is the pi cycle top indicator, okay, which has been faultless and flawless its entire existence. Okay, so let's go over that now. For those of you that don't know the pi cycle indicator, it is the 350 daily moving average with the 111 daily moving average as well, with some other lines that basically, it's not quite at the ratio of pi, but whenever you divide those numbers, it gets pretty close, and we typically do see prices respect this, right? Somebody came up with this formula a while ago. You don't have to understand the math behind it. Just understand that when the red line here, you see the red line, you've got the green line, the blue line, the orange line, the red line. When the red line crosses above the orange line, we're typically trending up. But it's when the red line crosses above the green line that we find a cycle top. Now, the very first bull market top that we ever had, the red line was just above the green line the whole time. We didn't have a cycle top come in, okay? The bear market was so short-lived, we didn't have a cycle bottom indicator come in either. But every other cycle, we look at this, right? Pi cycle top right here called directly at this weekly high. Okay, directly. Was it at the weekly high or the daily high? I want to zoom all the way back, actually. We've got enough data. We can do it, man. Let's go all the way back here. Let's see. Come on now. I think it wasn't the actual high, but it was very close, right? The pi cycle top came in right here, very, very near this high. And this was a interim high in the cycle, right? It was in the middle, in the midst of this cycle here. We found a momentary top, we consolidated, and then we had our true top over here. Pi cycle top called both of these high points very perfectly. It's when the red line crosses above the green line here. It also called the cycle low, this bear market low, very perfectly as well. Not right at the low, but a few days before it, right? It's whenever the orange line here crosses below the blue line, that's when we get the cycle bottom, okay? Red line crosses above the green, cycle top. Orange line crosses below the blue, cycle bottom, right? And here you had to cross back up. You can see here, time and time again, we're moving higher, finding resistance at the green line here and there, finding support at it in the prime aspects of our bull market. And then right here, once the red line crosses the green line, right there, that is the cycle top to a T perfectly in 2017. The bear market low, practically perfect with the cycle bottom as well, okay? Again, you don't have to understand what this indicator is or how it works. If you want to, you can look up the formulas yourself if you really want to, if you think that'll help you in understanding it. I think anybody can understand this, just understanding that when the orange line goes below the blue line, it's the cycle bottom. When the red line goes above the green line, it's the cycle top. And every cycle top that we've seen so far, and we'll go over this again, has been well above the green line, in case you haven't noticed, right? Cycle top indicator last cycle in April. Now, it didn't call it didn't call the actual all-time high, right? However, this was undoubtedly the end of the bull cycle, right? This is not bull cycle. That's not bull market. This whole phase, this is not bull market. That's sideways crab market. This is the end of the bull market right here. And it called that cycle top perfectly, okay? Just like back here, we go back to the 2015 cycle. We got the bottom pretty perfect. This was not the end of the bear cycle. This was just the crab market. The bear market was here, ended here, and then the bull market started here. This was not the end of the bear market. This was. So similar kind of thought going over here. This is the end of the bull market, but that was the cycle high, to be completely fair. called the cycle bottom here. It wasn't perfect. This time it was off a little bit, and that's fine. But again, the thought here, we zoom out to the weekly time frame, is that every single top that we've had has been some degree away from the green line. You see this every cycle top that we've had, even this one, even before the red line was actually below the green line, we could get a proper reading here. You were well above the green line every single cycle, okay? This cycle, we are here at $108,000 now. We are nowhere near the green line. And again, something else that we mentioned is that every single cycle, when we're in that finale phase, we're typically finding support at the green line. We're not just hanging out around it, we're not just above it, but we're finding support on it. We haven't even gotten into that mode yet, right? The green line, for those of you who don't know, if you look at the green line over here, this green number, it's at $205,000, $205.2 thousand, and it continues to move up, okay? Day after day, week after week, it continues to move up. So that is roughly right there where the green line is. We have never ended a cycle below the green line. We have never ended a cycle without the pi cycle top flashing, very accurately flashing. And we've never finished a cycle where the price, not only was it at the green line, but above the green line. So the thought here is that the green line's at $206,000. Bitcoin should not just make its way to this price, but well above this price in order to get the red line to cross above the green line and give us a cycle top dynamic finish, right? Beyond just the pi cycle top, there's a plethora of other indicators as well, bull market peak indicators that CoinGlass here is listed for us. There are 30 of them, 30 different ones. And regardless of whichever one you look at, whether it's the Peel multiple, the rainbow chart, days of ETF net inflows, I don't even know what that is, MVRV score, where is it? Bitcoin dominance, yes. Alt season index. Where's the other one? The pi cycle top, obviously. There's a bunch of different indicators here that are just they're not hitting. They haven't hit. They haven't suggested that the cycle top is in. And I think most of these indicators probably aren't that significant, but there are some that are very significant, right? Like the pi cycle top, I think, is very significant. And it has not flashed either. And that is an indicator on this chart as well. I was actually looking for the pi cycle top, but I couldn't find it. Maybe I'm just looking for the wrong word. It doesn't matter though. None of these cycle top indicators have hit. The pi cycle top indicator hasn't hit. Therefore, I think we're still in a bull market, okay? That's a primary reason why. Second to that, if we look at this pattern that we're in overall, this is what's known as a megaphone pattern or a broadening top pattern. If we go to the patternsite.com here, Thomas Bulkowski, who's a very successful trader and investor, well-renowned traditional market investor, he's been doing this for, I think, like over 50 years. He updates this thing all the time. Chart pattern indicator updated on 10-2825. It's the 30th now. He's probably even made updates since this day here, honestly. Overviews 11 by 11/1. So he's got overviews of this happening by this date too as well. Anyways, but he updates this all the time. This is a schematic, a explanation as to how a broadening top performs. Okay, we're going to go over that now because that's exactly what we have here is a broadening top. Look, he even gives a little diagram as far as what it should look like. Hold on, guys. My daughter's just playing with toys. The little diagram here, and it actually looks exactly like what we have here. And I'm going to go over this. I'm going to explain this in detail here right now, okay? Price trend, upward leading toward the pattern. That is, the trend start is below the pattern start. Okay, so the trend is leading upward into the pattern. Well, yes, we have that. Check. That's good. Okay. Shape, higher peaks and lower valleys. Well, we do have that. A megaphone shape, which is exactly what we have. Touches, at least 5 touches total. At least 5 touches total. Well, we have that as well, right? And this is something I learned even before I've actually found the pattern site, but typically broadening patterns do have 1, 2, 3, 4, 5 moves, okay? 5 moves. And if you want to say 5 touches, because that's what he's saying, I would think then that this is 1 touch, that's 1 touch, that's 1 touch, that's 1 touch, that's 1 touch. That's 5 touches there. However, or 6 touches, right? However you want it to be. Technically, that would be 6 touches within the pattern. But how I've learned is that broadening patterns typically have 1, 2, 3, 4, 5, and not just megaphones, specifically megaphones, but not just megaphones. Broadening patterns of any kind, right? Megaphones are higher highs and lower lows, but a broadening pattern is not just that in itself. A broadening pattern can be higher highs and higher lows, but it's broadening. You see, it's still broadening, and even in those, you still have typically like 5 touch points as well. Anyways, so we have that as well, right? Let's see. I don't think that we need to read the rest of that. White space, price should cross the pattern from side to side. Yes, it does. Breakout can occur in any direction, upward 60% of the time, and it happens when price pierces a trend line or moves above, below. Yes, okay, so we're all aware of that as well. The measure rule. The measure rule here is that you would take the high to the low of the pattern, which is the measurement of the highest touch point to the lowest touch point. So we would take the high touch point here, and not to the lowest touch point, sorry, I misspoke, but to the lowest price, because this price, it didn't touch technically, but it is within the pattern still. This is proper. This is how you would measure it, I promise you. I've been doing this for 10 years. I promise you that's exactly how you would measure this, right? Is that you take the high to the low of the pattern. He even says it here. Let's see. The highest peak and the lowest valley in the pattern, right? Here on the diagram, it actually shows it touching, but it doesn't have to touch. I promise you it doesn't have to touch. Highest peak, lowest valley in the pattern. This low is still well within the pattern. We clearly haven't broken out of it yet, okay? So that's the measure move. That right there is our measure move. And the fact that it's a line, I actually don't like that. I want to make it this. Let's make it a percentage point. Let's do from the low. And I'm taking this low, not the scam wick low, but this high here, okay? This is all to explain why I think the bull market is still alive and well, guys. But just hold with me, okay? This broadening top pattern, let's see here. Information in intra formation trade. Buy when a price rebounds off the lower trend line, yes. When price touches, buy at the third touch, blah, blah, blah. This is a high risk entry. Short at the top, no. What? Partial decline, okay. Partial decline works 72% of the time. A partial decline, if you guys want to click on it, we can read that here. A partial decline is this, where you literally, I mean, look at how perfect that is, where you hit the top trend line, you reach for it, you reach for this lower trend line, you get a partial decline, and then you break out to the upside. That's the thought there, okay? Which, again, as he says here, works 72% of the time, okay? The best performing patterns with upward breakouts are those with an intermediate term 3 to 6 month rise leading to the pattern from the trend start. So a 3 to 6 month rise leading into the pattern. Well, we look at Bitcoin here. We had from April until July a 3 to 6 month rise. April, May, June, July, right there. 3 to 6 months right there. That's literally exactly what you want to see. And he says himself the best performing ones have that going for them, okay? Partial decline works 72% of the time. Well, we have a partial decline, right? That's exactly what this is here, where you reached for the lower trend line, but you couldn't quite get there. It's a partial decline. It's literally exactly like this diagram here shows that he has outlined right here. It's literally perfect. It's just like that. It's to a T perfect. I couldn't ask for any better. The way that you'd measure this move, you take the measurement, you put it at the top of the pattern, which is here, and that measurement should take you all the way up to about $155,000. We're not going to measure it from the breakout point. It's from the top of the pattern, right? I mean, technically that would still be within the pattern at the breakout point. We could do it there, but that's a difference of 155K to 153K whenever it is that we break out of it, right? It's not that significant. I like to measure from the high point personally, but this is kind of semantics that we're arguing here, okay? So we've gone over the pi cycle top and why this well details the fact that Bitcoin likely is not done with its cycle, its bull cycle at all, because we haven't interacted with the green line at all. And not only that, but typically Bitcoin tops off above the green line. The red line has to pierce that. We have to get the pi cycle top indicator. We don't have to, but typically that's what we see before the cycle ends, right? And we're nowhere near that. The green line's all the way up at $206,000. The Megaphone pattern details a price movement up to 150K. I doubt that we're at the end of the cycle if we have that kind of bullish pattern about us now. And then beyond all of that, the Crypto Fear and Greed Index is at a 34 on CoinMarketCap. It's at a 34 on alternative.me. These are some low readings in the Fear and Greed Index, and I can't imagine that getting high levels of fear while promoting higher lows within a overall bullish pattern. I can't imagine that that is the signal we need for the end of the bull market to begin. That doesn't make sense to me. One last thing that I'd like to add, and I'm telling you guys, we could talk for hours here. But again, this is just the main point of this is just to express why I believe the bull market is not over, why I don't believe we're going lower here, and why I do believe that we're soon to find support, and November is going to be a really good month. We'll move up higher. Last but not least is the liquidation levels here. Okay, we look at the past 30 days. Refresh this. We have 21 billion with a B dollars in short positions across Binance, OKX, and Bybit. So probably over that across the whole space. $21 billion in short positions. Every single time we've had that, I took the liberty and gave us a indication as to when we've had this level of shorts every single time. We had 20 billion or more here. We had 20 billion or more here. We had 20 billion or more here. Do you notice the difference? Do you notice the similarities in all of these areas? What happened afterwards, right? Do you notice where we are now? We're at a low point, right? We're actually at the same point that the last two times that we had 20 billion or more in shorts, we were, right? We actually even had 20 billion in shorts back here as well, and we ripped through the roof. So just a thought there that it would be really odd. It would be very, very odd if the cycle top was in, if this is the beginning of the bear market, if we ignore the pi cycle top, if we ignore all of our cycle top indicators that typically work for us every single cycle. I'm very much expecting that Bitcoin has a lot of room left to run in this cycle. I don't believe that we're going to stop at 200K. I don't believe that we're going to stop at 150K. Those might be stopping points, but ultimately Bitcoin's going to $500,000 by the end of the cycle. And this, again, this is not an analysis as far as $500,000 price prediction goes. This is more of just my reasons as to why I, somebody who's been in crypto now for 10 years, am anything but pessimistic on the markets. I'm bored. I'm a bit sad. I want to see these things move up sooner than later. It's depressing watching the price action like this. It's depressing watching James Lynn come out and call all the delusional bulls delusional and actually be proven right. But we're going to get out of this alternate reality here pretty soon. Reality is going to kick back in, and the bull market's going to rally. There is actually one more thing that I want to talk about. There is one more thing, and I actually meant to put this in here, but I forgot. And it is the others chart, right? Now let's do the total. I actually like total 3 ES. Sometimes it just depends. Total 3 ES, excluding Bitcoin, Ethereum, and stablecoins. Okay, we look at this chart. Let's look at it on a weekly time frame, and then we'll zoom out. Okay, we compare it to the S&P 500. The S&P is the blue. I hope it's obvious. And then the other chart, the candlesticks, that is basically the total crypto market cap, excluding Bitcoin, Ethereum, and stablecoins. Last cycle, the S&P saw a massive dip, and we had a massive V-shaped recovery. Crypto did as well. Notice where we moved up, and this was nice, but this was the full brunt of alt season, right? This was when life-changing wealth was made. We had a nice recovery here, but we were more or less moving sideways and being kind of boring here before we actually picked up the pace and moved up higher. But notice how the S&P just continued to move up at a very voluptuous pace. It wasn't boring at all. Maybe for a little bit of time right here, but really just continued to move up more or less from that COVID crash there. Okay, we had a crash, V-shaped recovery, and then after some time, at some point, then the crypto market started to rally. Okay, same thing over here. What we're seeing now, at least in my opinion, that's what we're seeing, right? Is that we had a massive crash. An absolutely massive crash in the stock markets, right? V-shaped recovery. And the stock markets have continued to persist, but crypto's just been hanging out. It's been being boring. I think that we are right here at this point, right before the finale phase started. I think we're right there right now. We saw this happen last cycle. We're seeing it happen this cycle. The V here, the V there, the time afterwards, the boring price afterwards. And not only that, but if we actually analyze this for what it is on the crypto charts, let me take this away. Here, right before we popped off, right before we actually saw the alt season kick off in its full strength, we were in this consolidation phase, right? And we were grinding the top side of this phase. Well, here we're in this consolidation phase as well, and what are we doing? We are grinding the top side of this phase. It's a much larger phase overall, but within this range, it's actually pretty damn comparable in size to what we saw back here, right? The length of time, look at that, from left to right. Look at how long we've been consolidating. It's like the same time. And here we're consolidating at the top. Same reactions in the stock market last cycle as this cycle. Last cycle, stocks were rallying. Bitcoin was rallying. People were forsaking their altcoins, feeling like they made the wrong decision. And then right at that moment, just like right now, that's when alt season kicked off. Not just alt season, but the bull run, the crypto bull run as a whole. I got nothing else for you guys. I hope you enjoyed the video. Again, in moments like this, whenever we are down in the markets, whenever there's positive news going on and we're dumping, and now the bears are the loudest that they can possibly be, it's important to keep our heads screwed on straight and stay focused, because I don't want to see anybody right before, we are right at the precipice here of this fantastic phase up, I don't want to see anybody make the wrong decision, right? You might feel like you've made the wrong decision this whole cycle. You might feel like you've made the wrong decision by investing in crypto. Patience will show that that's silly thinking. That's just not proper, because this is the best market to be in right now. It really is the best market. This is the time to be getting heavily invested in crypto. Nothing else, right? I got nothing else. Hit the like button, subscribe. Thank you all. Take care. Bye bye.